Thank you everybody for hopping in. The idea here today is really just to go over the options profile, like I said in the blurb, and I'm going to go over it from a few different perspectives, and then we're going to look at something that actually happened this morning, which, despite the fact that today is Opex and in theory, zero DTE is a little bit less influential, sorry. Still seemed to pan out pretty well this morning. So yeah, I mean, starting from the top, right? If you guys read in the documentation, and I'd really recommend going through some of this stuff. I know some of it's a little bit dry, but it really is some of the best way we found so far to summarize this stuff. In particular, this practice document, which is pretty concise. But if you don't like to do that, that's kind of why I'm here for this. In any case, what we're doing with options profile, which is pretty simple, is we're using an algorithm to classify incoming volume. So we're thinking about like time and sales here as either bought or sold, right? So if a transaction comes through, time and sales, for every single transaction that comes through, we're saying whether we think it was a buy or a sell. And the clever among you will object that, well, for every buyer there is a seller, and for every seller there is a buyer. The typical account for this is to say, well, that may be true, but in order for a transaction to take place, somebody has to be the aggressor, meaning that somebody has to cross the spread, somebody has to be more willing to make that transaction than the other guy. And we also think about this in a different way. If you take a look at metrics in the resources tab, I talk about this as unmatched volume, meaning that, or unmatched inventory. So what I mean by that is there are cases, in the majority of cases, right, whenever a transaction takes place and a market maker, right, is the intermediary, what they want to do is they want to profit off of the spread and then match a buyer and a seller as quickly as possible and then pass that inventory off. So they don't have to worry about holding on to it. And what we're really trying to measure here, sorry, let me get back into state, is in what cases is there unmatched inventory, meaning is there inventory that the dealer is forced to hold on to because they don't find somebody immediately on the other side for that, right? So that's another way to think about what it means for something to be bought or sold. And once a transaction goes through and we can tell whether it's bought or sold, and it's bought or sold in that unmatched way, meaning that there was excess, right? There was an aggressor. Then we can start to say, okay, well, how many over the course of the day, right? So for instance, like if I'm looking at this call strike up here at 4,300, what this is telling me, right, when I hover over here and I see classified volume call 3,020, it's telling me that our system has noted 3,020 more buys than sells at this level. So in other words, we're netting it out. But we're not netting out calls and puts, right? We're just netting out bought calls versus sold calls. And in this particular case, it looks like there are more bought calls over the course of the day so far at 4,300 than sold calls. I'm going to take a second there. Do people have questions so far about that? And I promise this will get a little more fun when we get into the actual tradable side of it. All right, I guess I can keep going. Cool. So to run through, once we have that in mind, what we're really talking about, right? Over here, 4,300, 3,000 bought calls. If we hop over here, 4,265, around 4,000 sold calls. And this is all from the perspective of the customer, right? And there's a reason that we did this. It's because whenever you look at something like volume profile or something like that, right? You're looking at the overall positioning of the market. We want to know what market participants are doing, right? And this is a little bit contrary to like a lot of the literature that you see out there in terms of dealer exposure and GEX. And that's because I don't really care so much, right, about, and like, yes, you can infer from this what the dealers are doing. You could, but that's not my main priority. My main priority here is to figure out, well, what are people doing, right? Like how are people positioned? And so if I were to get a broad overview, I'll run through it one more time, right? 3,000 bought calls at 4,300, around 4,000 sold calls at 4,265, around, let's say, 2,500 bought puts at 4,215, and then 4,230 has around, let's say, around 3,000 sold puts, right? And so these are all customer positions, right? And so I can tell you already, just by looking at this, people that are trading the SPX today, that are trading options on the SPX, are expecting, and this is, I mean, my tweet from the other day, they're expecting a range between 4,265 and 4,230. I can also tell you off the bat that there is decreasing confidence that this is going to be the bottom of the range for the day. It probably still will be, but there's decreasing confidence. And you can tell because, you know, these sold puts at 4,230 are bailing right now. And that kind of gets me into the dots that we covered in the instructional video or visualizations video, which is, right, this tells us where we were 30 minutes ago. So we can say that 30 minutes ago, there were 4,000 sold puts over here. And then 5 minutes ago, there were 3,500. So that means that in the last 5 minutes, they've bailed out of about, what is that? About 1,000 of these contracts. In other words, they've been buying back about 1,000 of these 4,230 puts, right? Which in of itself is like a pretty decent point of information. And so you can start to blend together, right, that time component. I mean, another, just to give you guys another example, right, if I look up here at the 4,300s, I can say that, oh, wow, right, like earlier in the day, they were in more of these, and then in the last 5 minutes, you know, they've gotten out of about 1,000 of them, which makes sense, right? Like, what's the likelihood that we're getting up there? When we were, actually, let me hop into order flow just to show a little bit of price action here, but when we were coming up here, and this is actually, we came up and touched VWAP on ES, most likely they were still holding on to those. And then they probably took that as an opportunity to get out because the likelihood that, you know, these options are going to be worth anything by the end of the day is very, very low, right? So they probably took on that opportunity. All right, cool. So now that we have kind of like a basic idea of what all this stuff means, we kind of like, things get a little bit more interesting in terms of how to read it. And the cool thing is that it's like, I've been talking to so many different people that have started to use this, and depending on their level of expertise and their, like, whether they think in terms of, right, like price action and positioning, or whether they think in terms of volatility, people tend to have a different take on what's going on here, right? Like, our priority is just to show you guys the positioning, and then over time, as you watch the price action, you can learn to see it in your own way. That being said, right, I'm not against providing sort of like a guide to using it, because I've spent a lot of time watching this, obviously, and there's some benefit in that. So there's a few different ways that I think about this, and the simplest way, to be honest, is just to think about it like a giant volume profile. So for those of you that trade futures or even equities, a lot of times you'll have a volume profile on the right of your chart. And there are certain behaviors that are quite characteristic of volume profile. And that is, and the main behavior I'd say that's characteristic is that when we have a very large node, that tends to be a point where we stall out. And we also tend to traverse territory where there's not very much like aggregation of positions quicker than we do when there's a high density of positions, right? So let me actually load history for the day, so maybe we can find a better example of this. And then I'll get into the difference between long and short positioning, which is where this gets a little more interesting than just volume profile. But basically, you know, if you see a very, very large node, then that is a good point to either look for a reversion or a breakout in some direction. And if you see, especially if you see territory beyond it that is very thinly populated, because, like, let's get back into what does that mean, right? So from a purely, how would I put it, non-options perspective, right? If somebody's sold, you know, 2,000 of these 4230s, that means they're willing to buy the market at that strike. So when you look down and you see this like dense population of sold puts here, like all the way down, it means we essentially have limit buy orders underneath the market all the way down here, right? Um, and then in the same way, right? When you have somebody selling calls, right? They're saying that if price gets above this level, it's just basically a limit sell. It's like I'm short the market above 42.65, right? And so you can understand it in that way, right? From it's kind of like a futures trader's understanding of what's going on here. And these are just the short options. In terms of the long options, right? It's people who are willing to buy the market here, 4,300, for instance, or people who are willing to short the market here at 42.15 because these are long puts, right? And so, what I would kind of encourage, if you start to think about it that way, you can kind of get a sense for, it becomes kind of more like a puzzle, right? It's like, what is the overall positioning adding up to? Where are the holes? Where are the vulnerabilities? The one thing that futures-based thinking doesn't quite do is work in the time dimension. But that's something that we can definitely and we will get to. All right, let me find one of those examples from earlier today, and I'll slow down a little bit. I have a tendency to go a little quick through this stuff. But yeah, let me know if you guys have questions, like I'll answer them on the go. Yeah, so feel free to ask. I can't let people on the stage to speak because I don't have OBS set up for that, but if you guys type out questions, I'm watching right now. Okay. So here's a really, really simple trade actually from earlier today, which is probably a good starting point. Which is as we were coming down today, right, towards this, we've been talking about this 42.30 level. As we were coming down, there was this like pretty interesting inflection point where, and let me move back down there. So you can see as we were coming down, they started getting into, or when I say they, by the mean, I just mean traders in general, right? I know that that's sort of there's a lot of superstition about that term. That's all I mean. Anyways, as price was coming down, you can see, right, price is this white line, spot price. And they started adding to short puts right here, and then long puts over here, and long puts right here, right? And in general, what that tells me as we're doing that is, wow, right? Like these levels underneath us are building up. So I started to get a lot more bullish as we were coming down into this range. The one issue here, right? And we all know what happened, right? But the one issue as we were coming down here, oh, give me a second here. Okay. Was this time, and like in terms of actually trading it, like this was a pretty intense time. And you guys can see, by the way, we're squeezing now, and we're gonna get into why that's happening. But during this period, right, we were trapped between that 42.35 long puts and 42.30 short puts, right? So this is kind of like a ton of people saying, hey, I'm willing to buy the market down here at 42.30, and there were a ton of other people who were short at 42.35. And so the way to think about this is if we get enough momentum or conviction in the sense of people getting underneath and selling puts under the market and being like, hey, I'm willing to buy, to the point that we can break above these 42.35s, these people are going to become trapped shorts, and we're going to be able to squeeze up. And it took a while, right? Like we were bouncing around for a while between 42.30 and 42.35 until eventually we were able to hold above the 42.35 level. And once that starts to happen, these people start to bail. And you can see it because there are these like dots here, right? And so as the bar shrinks, right, and we can see that the dots are outside the bar, it means that these guys are bailing. So these long puts are bailing. And as those long puts bail, it actually clears the way for us to continue upwards. And once that starts to happen, actually, we have this dynamic, right, where the way I would categorize this, or like characterize this profile, is if we had fallen below 42.30, we had a pretty clear path all the way down to 42.15, no question, right? Because the sort of the effect of all these puts, like all of a sudden there's a lot of trap traders who essentially said, hey, I'm willing to buy at 42.30, and then it didn't work out for them. And so that usually means that they have to flip short in some way or another. Again, I'm using a futures type of explanation because that's more accessible. I'll get into the more advanced options stuff later. But let's say that there's a lot of these trapped traders, and then all of a sudden we have a trajectory all the way down to this big node here at 42.15. But hey, that didn't happen, right? We popped above eventually that 42.35, and then what happened after that? Well, immediate squeeze up, right? Immediate squeeze up. And so that was a pretty beautiful trade, like just to see, hey, look, there's a lot of essentially longs or short puts building up underneath here, not to mention these guys, right, which are trapped. And so the thing is, if price stays above puts as the day is progressing, especially because we're only looking at 0 DTE in the options profile, and sorry, that's something I should have said earlier, then those puts start to decay, right? And this is getting into the less futures and more options type of perspective on this stuff. Those puts are going to decay, and as they decay, it essentially is kind of like people getting, like the market as a whole is getting slightly more and more and more long. It's passively getting more long. And so I don't know if you guys have heard, on Twitter, people will say, or Jem Carzano will say something like, hey, time is not exactly charm effects. Yeah, time is not a bear's friend. And we can see that on a 0 DTE basis when people are in puts, and then all of a sudden towards the end of the day, the last couple hours, they have to start to get out. And so if these guys are trapped holding on to these puts down here, and yeah, exactly, they have to cover, and that squeezes us right back up. Okay, cool. So that's a really good example actually of a trade from earlier today where you could have been watching this positioning. And I mean, I didn't do the best job of it, but I did what I could at the time. And it took a while. It took a while, right? Because they're fighting over it. But at the end of the day, you can see, right, like it's very, very hard for us to sell off so long as we stay above 42.30. Yeah, no worries, order flow. All right, so we've started to get into a little bit of the more optiony stuff. Let's actually hop over to what's happening right now because that's kind of interesting. So we just kind of squeezed, right? So we saw for those of you guys that are watching ES, we were consolidating. We had a bit of a sell-off down to 42.68, which incidentally is 42.30 because the ES premium, or it's 10 points higher. It's right here. 68.70, yeah, because there's a 30-point premium. So essentially we sold off to down there, and then we popped right back up. And so essentially what happened is like these long puts became our next supportive level here. And then in terms of projections as to where we can go now, things are kind of messed up, right? Like we could see a full retracement today because there's a ton of puts underneath us. And then our next sort of big target would be these 42.50s, which are long calls, right? And so this is something very specific to SPX, and I put it in the practice document, which is that because SPX tends to be short vol, and I'll get into that a little bit more in a little bit, but these short options levels, they tend to act like accelerants actually, right? So to the point where if we were to get above, these short calls, we're definitely going to this next level. If we get above these, we're probably going all the way up here. But the long options levels, they tend to stall us out. And that has to do a little bit with like the customer versus dealer positioning stuff. But one thing to think about, a really intuitive way to think about it is, imagine that you're holding on to these 42.50 calls, long calls, right? And all of a sudden price comes right up into them. At that point, you're at maximum gamma. You have maximum convexity on those options. So it is the perfect time for you to liquidate. And if you're still bullish, roll those options up. And when you liquidate, and a lot of those holders do, what happens effectively is you're adding short deltas to the market, which brings price back down. And the same applies for put levels, right? So that's why these long options on SPX, they tend to stall us out and act more like muggy or muddy territory. Whereas if we get beyond or to sort of a short strike, it tends to actually accelerate us further. I'm going to take a second here. And let me get back live. All right, great. So that's why we're, to my mind right now, right? Like that's why we're kind of stalling here at these 42.50. it's because there's a lot of people, and you can literally see them right now, right? Like they're liquidating, they're getting out. Not everybody, but a lot of them are getting out. So even though we're consolidating above VWAP on ES, we're actually stalling out a little bit here. Now, my expectation would be if we do get above this strike, we have a pretty clear path back up to 42.65, which kind of accords with the principles that I was using before, where I'm saying, hey, like there's not a lot over here. There's not a lot over here to stop us. All right, I'm going to take a second and go through. There's a couple of questions that came in. Let's see. Oh, I guess somebody deleted one. For the record, long options mean long calls and long puts. Correct. Yeah. So, right, like we want to make it. We tried the other way, and it was very counterintuitive to read. So what we're trying to do here, right, like if something is to the right, it means that customers are long that option, whether it's a put or a call. If that option is to the left, it means that customers are short those options, again, whether it's a put or a call. So right now, for those of you who are a little bit more option oriented, this is actually, you could characterize this particular strike, the 4250s, as a synthetic long here. And we do tend to stall out around synthetic longs. So they're short the 4250 puts and long the 4250 calls. And so that's kind of like a long futures position right there. So there's a lot of, like, as we come up into it, there's going to be a lot of processing as people are trying to get in or out of those positions and sort of reconfigure. The other thing to note, and actually maybe I'll get into Gex for this a little bit. Oh, that's a good point. Let me reload. Oh, there we go. Okay. Okay, yeah, I'm back live here. Current strike at 42.55. Does that mean that there's no intervention before 42.65? Actually, I'm going to load history again because I want to see what happened here over the last couple of minutes before I answer that. Hey, Freddie. Yeah, so I'm going to get into SPY a little bit in a second because it actually gets pretty interesting because it does depend on, like the ticker is relevant here. So for the purposes of this, I'm just really just covering SPX. Okay, yeah, so nothing really changed about that 42.50, and then it looks like these short puts are bailing. These calls are actually holding steady, and then 42.55 short calls are also growing, but these puts are bailing. So this just looks like consolidation to me, like nothing particularly conclusive at the moment. No, the chart auto refreshes. The only reason that I had a little bit of bugginess there was because I loaded the full history from the day and I'm keeping it loaded. So we're still working out a couple of kinks with that. That's all that was. Yeah. All right, cool. So another thing that I want to go into and point out here, right? Aside from keeping in mind that there's that difference between long options and short options, is that our proximity to a very large strike is relevant. So, so for instance, like let's go back in time and think about these 42.30s again. They were huge, right? And then as price starts to move away from them, people start to bail out of those options because they're actually taking profit, right? Like that trade has played out in large part. But the other thing to note, right, because this is volume, it's not GEX, is that the maximum juice that those are providing for us in terms of pushing price up, right? Because remember what I said about these being sort of offers to buy the market down here, or bids rather, sorry, is that as we move away from that strike, and this gets a little bit into more of the option stuff, the power that those are providing us in terms of juice for upside is diminishing, right? So in theory, right, if you want to see us squeeze, then, I mean, this is not a terrible setup because we have puts here, here, and all the way down here, but our juice sort of reduced because we don't have as many puts underneath us. And these are long calls here. So these holders could be liquidating, which is stalling us out. If, on the other hand, we have, regardless of whether they're short puts or long puts underneath us, and we're hopping above short call strikes, those sort of just add to the fire, right? Like they add to the fire. I mean, they give us more juice, right? And so a lot of times when you see these massive squeezes on SPX, what's actually happening, and this will get to your question, Freddie, what's actually happening is that we're squeezing through short call options. And what's like the reason that that's happening, and a lot of times you actually won't see short call holders on SPX liquidate. What'll happen is they're probably hedging either in the futures market or using more sophisticated means to hedge, meaning that they're long elsewhere. And so you'll see us go through all these short call options and just squeeze all the way up the chain. And so long as we don't have a massive strike above us like this 42.65, and rather we have what I call clean laddering, where we have, short call strike, short call strike sort of in a very nice clean pattern, we can just keep on going. And that gives you pretty decent confidence for continuation. All right, let me, the dynamics that I clarified here, some of them are irrespective of the ticker, but the majority of them, or sorry, another half or so of them do depend on what you're trading specifically. Also, give me a second, guys, because I think having the loaded history with the live stuff is making this a little bit janky today. This is why we do a soft launch before we do a hard launch. Are you guys having, oh, there we go. Okay. All right, let's switch over to, and this time I won't load history. And let's switch over to SPY. So SPY is actually a lot clearer today. You can see that it's short options all along the chain, right? So according to what I was saying before, right, if we're able to make it above 424, it's very likely that we're able to like continue the squeeze until we start to see a strike that builds up with short call options to sort of cap us for the day, right? The thing to keep in mind about SPY is that the players are slightly different, right? So there's more retail trading SPY, obviously, because the cost of the individual contracts is lower. And also what's really interesting though is that there's a lot of short options on SPY, right? And so there is a lot of sort of institutional trading of SPY as well. It's very, very liquid. It's slightly less tax efficient, but it's still a really, really good vehicle to trade. So Freddie, you were asking, my experience has been that if we were to hop over into the order flow tab, in terms of having a directional bias, SPY is often a lot better. And I think that's because there are more, there's a difference between, there's more long options on SPY in general than SPX. And that's also because in general, okay, here we go. We're squeezing above that 424. Okay, so if that does happen, then I'm expecting some more upside here, just FYI. Sorry, what I was saying is that in general, when people are purchasing options en masse, especially on SPX, also on SPY, it means that they're actually more confident, that there's more of a directional bias there. And the reason is that if you're short options, right, you can still be wrong, somewhat wrong about direction, and make money, especially if you're trading 0 DTE off the fact that, off of the charm, and basically, right, like the way that volatility is going to get sucked out of the marketplace into the end of the day. But if you're long an option, then time is against you, and you have to be right directionally. So for instance, like a lot of times we'll see, for instance, we'll be on SPX, and I mean, today not so much, right? Because there's the only long options are really relatively close to the money, and the short options are sort of all across the chain. But a lot of times, and I pointed this out on the Twitter, if you see a really big accumulation of long calls, let's say, come in over here, right? off the open, especially. Like that gives me a very, very strong bias for the day, because that means that somebody's out there and they have a massive amount of conviction. It's not entirely clear to me, right? Because we're not monitoring every single marketplace, whether those options are there to hedge something. My intuition is that they are, right? They're there to hedge like an upside tail risk or whatever, but it doesn't really matter because the fact that somebody sees that there's risk there and needs to get long options, and I'm talking about seeing like, what is this? There's around 2,300. Like, let's say that there's like 4,000 of them out of the money up here. Like that is a pretty bullish sign. Similarly, if you see really like deep out of the money puts come in at the beginning of the day in 0 DTE, right? Like long, right? That's kind of a warning sign. If you see them come in short, that's completely risk off. It's saying, hey, somebody's like super happy to offer up all of this volatility to players, right? All of this downside convexity to people. So yeah. All right, just a quick update here. We are actually finally pushing up. As I said, right, like this is going to be a muggy area. We hop over into SPY and we see, oh, okay, look at that. We hopped over 424. Looks like we're probably clear to at least get up to 425. I mean, these short puts right here are actually a pretty nice sign for that as well. So, that would be my expectation, more or less. All right, so I kind of started with the volume profile type reading. I've already sort of moved my way a little bit into thinking about, how participants who are actually trading these options are thinking about volatility and thinking about time. But there's a lot more to say as far as that's concerned. And like part of that is, just give me a second, actually. I'm going to answer a couple questions because I feel like I've talked myself out a little bit. I just get kind of excited about this stuff because it's fun. It's like for the first time you get to see the full, or I mean that's what it felt like to us, like seeing the whole board, right? Just to compare it to Classic, right? Like in Classic, we just have to make these assumptions where we're like, okay, this is GEX by volume here, like this is how much we have at all these different places, but we don't know how much of that has been bought or sold. And now all of a sudden you get this sort of picture where it's very, very, there's a little more thinking to do, but also the landscape is so much clearer, to me anyway. Yeah, anyway, for me, it would be relatively bullish that we're holding above these long calls right here on SPX. And then, obviously our next node here is the 4255s, but there's like a kind of a low volume area here. So if we pop this guy, I'm expecting a nice little trip up to 465. But that might take a little bit until later in the day because in order for this to happen, right, we need to see like these puts need to decay a little bit more. And you'll notice that different periods of the day sort of have different rates of decay in terms of the puts, right? So that's why a lot of times you'll see those squeezes come in at like 3 p.m. starting at 2:30 p.m. It's because all of a sudden we start to see a lot of those options decay. People finally start to realize, in other words, oh man, price isn't going to actually go there. I better get the hell out of these, or I better hedge myself by buying something else, and then we start to see price come up. Having a look at order flow. Yeah, we can. I do want to stick around here just in case people have more questions, because I know I have a tendency to go through these things pretty quickly. So, if you guys have questions, I'd really encourage asking them now. Is all the volume shown in state/next also present in state/options profile? Oh, yeah. I mean, I can go into that. Yeah. So I'm not going to spend a ton of time on the GEX, but yeah, so full, right, like next, actually we'll go to next first. Next is basically just taking options profile and then grabbing all the calls and all the puts and then representing the calls as positive gamma and the puts as negative gamma. And there's a couple different reasons that we did that. I get into it a little bit in the visualizations video, but basically we want to see where the levels of maximum convexity are, right? So instead of looking at options profile, right now, for instance, which is sort of this like mess, like it takes a little bit more time to be able to read it appropriately. If you just hop into next, you can see what I'm saying. It's really clear already. So we're above the 4250, like that is quite bullish for us. Because it's acting as an accelerant, but then this guy here is putting downwards pressure on price, the 4265. So we're kind of trapped between these two levels here. And for instance, oh, see, that's not particularly bullish, that this guy's been growing. So it is quite likely that we're going to come up and tap. But for instance, if we have the gamma here grow a ton, and these guys down here diminish, it becomes less and less likely that we're going to obtain that upside, right? And that sort of gets into reading the GEX charts a little bit more. But, oh, here we go. All right, so we're starting to make our way. Freddie, you're asking, I said that SPX usually displays negative convexity. That's a good jump, yeah. So when we're, for those it might be unclear, but another word for these sold options, right, is negative convexity, meaning that people are short convex moves in the market. And positive convexity is everything on this side of the ladder, and that's going to set us up pretty well for order flow. So Freddie's asking whether the negative convexity that is typically displayed on SPX is also usually the case for SPY. And this is where things get a little more interesting because it actually depends a little bit on the, it actually depends a little bit on the volatility environment, right? So what you'll often see, and I mean, this is what we talk about this when we're looking at, for instance, let's see over here, net convexity, right? And I'm on SPX, yeah, you can see that at the beginning of the day, and this is actually a really good example. Let's just hone in on that for a second. And we're gonna get it up here, net convexity, great. And I'll go into what this means in a little bit, but it should be relatively clear. So at the beginning of the day, we were selling off, right? And when we're selling off, people want to be long options because volatility is rising, which means you want to be long convexity. You want to have this exposure to big moves in the market when we're selling off. And so you can really see that, right? Like we start the day and all of a sudden, boom, people are buying options in SPX, buying more options in SPX, and we start selling off and we continue to sell off. And where does the bottom in the market come in? Well, all of a sudden we move from an area of being net positive convexity to all of a sudden there's this dump, right? It looks like people just sold a ton of options. Another way to think about that is, hey, a ton of liquidity just came into the market. A ton of people are offering either to buy or to sell. And in general, wherever there's liquidity, things are safe, right? Vol compresses and we go up. And so as soon as you saw that come in, we started to move up again. And then when this came in too, this was a big warning sign here. It's like, oh, we're coming up, but it's not done, right? We're not done in terms of selling off. And so we had this move, we tested, and boom, sold right off again. But when that did happen, all of a sudden convexity came down again, meaning people were selling options again, meaning people were providing liquidity again. Once that happened, all of a sudden our base was secure and price was able to start to come up again. So that's like, let's say if I were to read net convexity for the day on SPX, that's kind of how I would go about it. I should mention also we are pushing up into that node that I was talking about before on SPY, but I don't really have time to hop over into there right now. In any case, to actually answer your question, Freddie, and sorry it's taken me so long, but SPX does usually display a negative convexity because it is the efficient value on selling options is higher than buying options. So there's a lot of big players that are really into selling options all the time, especially 0 DTE on SPX. And so yeah, our default for SPX is negative convexity, right? Also, convexity going like this is squeeze territory. Like this is, yeah, just FYI. But yeah, so if we see convexity be above zero, net convexity be above zero on SPX, like that to me is a pretty bearish sign. Like that does not make me warm and fuzzy about the market. Let's switch over to SPY since you're asking about that. And net convexity on SPY. Oh boy, so it looks like SPY knows what they're doing, and they've known what they're doing all day. So this whole sell-off, was not a I guess SPY traders didn't think very much of it. I will say, right, so I would believe SPY more in terms of a directional bias. I would believe SPY less in terms of a volatility bias. Traders that trade volatility on SPX tend to be smarter. Traders that trade direction on SPY tend to be right more of the time, but you kind of just have to spend a little bit of time with it. I think SPX is a lot clearer. If you see something really big come through on SPX, like, you know what's happening more or less. And a lot of times, actually, the way that I put it is, when SPY is wrong, it is often very, very wrong. But if it's following trend, as it is right now, then we have a really big boost on what we're doing. Whereas SPX, I would actually trust a little bit more of the time. That being said, right, like, this is going to depend a little bit on the volatility regime. It's going to depend a little bit on who's trading SPX versus SPY in terms of, institutional players versus retail. So I don't want to make any sort of official pronouncements on that. You do have to spend a little bit of time with it and sort of gauge what volatility regime we're in to figure that out. And maybe I'll have a little more to say on that in a bit. Let me actually hop over to stay on SPY. Okay, yeah, so it looks like we're still playing with that 424, and then back on SPX. All right, yeah, same deal. Same deal as before. It's really, these 4265s are really sort of like being a buzzkill right now. And then on SPY, I wouldn't be surprised. Yeah, so this is not particularly good now. Because something similar can apply, in the same way as I was talking about the puts, where, right, like, the puts decaying have a tendency to push us up. Similarly, right, like, the short calls decaying have a tendency to put a cap on us. So we had this really interesting moment where, had we gone above 424, it's very likely, and it still counts for the rest of the day, it's only 146, right? So if by 2:30 or so we're able to get above 424, a squeeze is very likely in the cards. There's a lot, I should also mention, right, like, there's a lot of choppiness and craziness today, and part of that is because today is the Opex, right? And when we're looking at options profile, when we're looking at next in terms of GEX, we're looking at 0 DTE. And right now, as with any Opex, people are trading and reshuffling positions all the way across the options chain into the future. So that can create a lot of choppiness and unpredictability. So it's kind of ironic that we decided to, or that I'm doing this today. But, it's a Friday, I'm done trading, it made sense. But yeah, it's probably an Opex Friday is one of the trickiest days to trade this type of stuff. It's not that it doesn't work. We had a really good play earlier in the day, but as inventory starts to reshuffle, we're talking about longer dated stuff, people that are rolling their monthly options out, that can create some, how would I put it, jiggles in the market. All right. Actually, for that reason, I do kind of want to hop over into full. And so I should mention that, right, like, full is actually running our order flow classification on 90 days worth of expiries, and then essentially creating an options profile full of all of that volume with 90 days worth of expiries instead of just 0 DTE, and then taking the gamma of the calls versus the puts and putting it all into a single chart. So this is like, if instead of just looking at what's going on today, you want to look at what's going on in terms of unmatched inventory for the next 90 days or so, you can look here, which personally, I find a lot easier to watch. All right, so it looks like we had that test with whatever that was, 424 on SPY, and then on SPX it was, yeah, 4255-ish, and now we're losing that. And, like, that's not particularly bullish. Like, when you see something like this, right, usually, and this is how now I'm moving away from purely options profile into GEX a little bit, but usually if you want to see a squeeze, you want some sort of clean laddering. So we would want some more calls to come in over here, and we want this guy to diminish so that it doesn't act as a cap. Because again, whatever's all the way above us is decaying pretty rapidly, what's underneath us is actually boosting us in terms of GEX. And the reasons for that are sort of more option-y, but that's kind of the TLDR. Yeah, and you can see how they're bailing out, right? Bailing out of these 4250s, which is not particularly bullish. So, if I had to sort of revise my projection, now that 424 failed, and now that, I forget exactly what that was on SPX, but it was also VWAP on ES. Obviously, I reserve the right to change my mind, but this is not looking particularly bullish anymore, unfortunately. Or fortunately. I guess it depends what you're doing. All right, let me see. Okay, I guess the last question was about order flow and implementing it. Can circle back to that. But I do honestly spend most of my time watching this. 4250. All right. I really wouldn't be surprised to see us tap 4265 at some point today. All right, let's hop over a little bit into order flow here. So short puts. Remember I said the proximity of those short puts, or long puts actually, so long as we're above them, is quite relevant. So because we're so far away from all these big nodes, like they will have an outsized effect like at the end of the day. But for now, it's sort of medium. All right. So I talked about convexity for a little bit. And convexity is like if you were to imagine taking the gamma of all of the long options versus the gamma of all of the short options, where the short options have negative gamma and the long options have positive gamma, right? All in terms of gamma exposure, and then putting it in a single metric, that's what net convexity does. So it tells us in terms of gamma, are traders in SPX net long or short options, basically, in terms of their gamma, right? So for that reason, right, for instance, like today, even if we do sell off, like first of all, despite the fact that the GEX is not like seems to give us that cap at 4265, I'm not particularly bearish. Like I wouldn't take a bearish trade here because look at how many short options there are. Like that's a lot of liquidity being provided, and so it's not likely that you're going to get a massive break or anything like that, barring any crazy Opex phenomena. And then if we check SPY, I think that we probably had a bit of a jump there. Yeah, so when we sold off here, we had a bit of a jump in net convexity, right? Because there's some more people that got long options. And then it seems to be holding up here. If we see it come back down, I think that'd be a little bit more constructive. Net convexity is based on only 0 DTE. So in the future, we are probably going to be implementing more expirations for all of these subplots, including toggles to switch between different ranges, because then it can adapt a little bit better to your trading time frame. Right now, GEXPOT as a whole is really more so designed for intraday trading. Do you guys have any requests in terms of other metrics to look at? I'll toggle down. And we can kind of jump between them. Also, Horndog, I feel like you noticed something really cool the other day. I forget exactly what it was. DEX, like order flow, or the aggregate? Aggregate, okay. Oh, that's interesting on SPY. So it looks like, so actually I'll get both of those on there so that we can, let me put this guy on DEX order flow. I'm gonna get the filter low because that's what we care about right now, and then I'll get this guy on aggregate. So for DEX order flow, what we're doing is, right, every order that comes in, and let me hop back into options profile here for a second. Okay, I guess we'll stick to SPY. So every order that comes in, right, like let's say it's a short put, well then that's a bullish order. So we're going to take the delta of that order, and the delta of that order that came through, right, multiplied by the number of contracts is going to show up here, and it's going to show up as positive because those were bullish deltas that came in. On the other hand, right, if you have short calls, those will show up as bearish deltas. If you have long puts, those will show up as bearish deltas. But if you have long calls, those will show up as bullish deltas. So it's kind of a way of keeping track of big trades that are coming through, and it is pretty cool for catching transitions. So, for instance, I don't know if you guys can tell, but like, let me see. Here, let me bring the filter up a little bit so we can just see that guy. So right here, for instance, right, SPX came up. We had a massive order that came in, bearish delta order, and then it completely marked a big pivot, and we came right back down, right? So it can be useful for doing that type of stuff, right? It's a way of basically taking an options order and then characterizing it in terms of sort of its stock equivalent, or what it would be like if somebody just, went short a ton of shares over there. And then what we do is we take, let me get this back to where it is, right? There's a lot of activity going on here. And so we want to take all this order flow and then aggregate it over the course of the day and say, okay, have people bought more or sold more using options over the course of the day? And you can see as we were selling off on SPY, it looks like there were a lot of contrarian traders that just kept on trying to buy and buy and buy and buy. And this is what I mean sometimes about SPY being a little bit wrong. Because a lot of times it's retail. And so as soon as they started to give up and get out and sell, that's when the market actually stabilized and we started to come back up. And that's not super crazy to see. I bet, let's take a look at the same thing on SPX actually. That would be interesting. It looks like it's exactly the same on SPX actually. Let me reload just to make sure, but yeah. Oh no, okay, that makes a lot more sense. And yeah, there's a couple of kinks like that we are still working on. But this is exactly what I'm saying, Freddie, where for instance, if you look at aggregate DEX on SPX, it was coming down during the sell-off and then started to get bullish before the index actually started to come back up again. So SPX traders were really thinking ahead, whereas SPY traders, in terms of aggregate DEX, were very much behind the curve in 0DTE and just trading reactively to the market. So a lot of times, especially in a higher volatility regime, I do prefer to use SPY as sort of an indicator to fade. Because, okay, here's the other thing to keep in mind, right? When we're in, ZERP, like zero interest rate, like markets just go up all the time, the degenerate retail traders that get long SPY calls all the time actually tend to do pretty well. And so you're not in a bad position if you follow what they do. But as soon as volatility starts to rise and the markets get a lot more choppy and things get really crazy, at that point, I think it's that the professionals start to shine a little bit more. And so in a higher volatility environment, I would really lean towards trusting SPX and using SPY as an indicator to fade mainly. Okay, is net convexity? I'm getting through all these questions. Freddie, you asked if it's possible to get history for multiple days. Right now, we don't have that because it's actually a massive amount of data. What does happen, though, is, for instance, like if you want to review Friday or the previous day, you can review it until 8 a.m. the next day. And technically, this is sort of a bug, maybe a feature, but if you leave your tab open and just keep history loaded, you can keep multiple days of history loaded on there until it crashes your browser. So, have fun trying that out. Okay. Oh, okay. So somebody asked, that I tweeted a couple days ago about a local top in DEX order flow, which ended up being the top for the day. And if I can talk about that tweet. So to be honest, the way that that worked was I was looking, I'm pretty sure I was looking at SPX because that's usually what I look at. And I just saw, for instance, right, like you guys can see, right, there's like massive orders sometimes that come in. And when they do, and so, I mean, it was that plus a little bit of context. I mean, it was mostly just luck that that was the top for the day, right? Because just because a really big order comes in, that doesn't mean that it's going to determine the rest of the day, right? Like there's like flow, like conditions are always changing. Like the way that we built this is so that you guys can see stuff live and adapt to the changing environment. So no, I mean, that was, I saw that that was a really relevant order. And so I marked it and then it just ended up being the top more or less for the day, which was more luck than not. I will say though, if you did pull up DEX order flow for that day, the other two sort of tests of that same level also got really negative DEX order flow. So you could experience a little bit of reinforcement there, actually. All right, moving on. Can you filter DEX flow for any DTE? No, not right now. Right now it's just 0 DTE, again, because this is really just made for intraday stuff. But that is in the plan. It probably won't be any specific DTE. It's probably going to be either 0 or then a week or like a month or something like that. So we'll probably choose like 3 main ranges, and actually that's something I'm working on, figuring out exactly what I think the best ranges, the most actionable ranges are. But yeah, that should get built in eventually. All right, so Harndog, apropos of all of these questions regarding what we're going to be doing, Harndog's asking if we're going to do a roadmap page. And yeah, so right now, obviously, because this is a pretty big release, we've been really busy with, yeah, exactly. I think that's probably what I'm going to do, end of week, end of month, sorry. We've obviously been super busy with this release. There's been a lot that's been going into it. Obviously, you guys have noticed, you know, there are always a couple bugs along the way. Overall, things have gone really, really well. I'm super happy with it. But the first thing that we're going to do once we get through hard launch, which is on October 30th, is that we're going to get together, and we got a ton of feature requests from beta testers, from you guys as well, and we're going to sit down, basically map out all of those feature requests, prioritize them, and then just hack them off one by one. And as part of that, we're going to release our roadmap as well. So that's going to be like, okay, by this, you know, by Q2, we expect these features. By Q3, we expect those, all that stuff, so that, you know, if you sub, especially to the upper packages, you can know what to expect in terms of upgrades in the future. Because, right, this is I want to mention this, like, in terms of what we have on the back end, right, as you guys can probably sort of see, this is sort of just the surface, because on the back end, we're running order flow classification on, you know, we can run it on an arbitrary number of expiries. I mean, we're doing 90 days right now. But if you look at options profile, you can only see 0 DTE. In addition, we have Vana, we have Charm, we even have color. Like we have first order, second order, third order Greeks for everything, every order that comes through all the time. That's all already built. The question is just, how do we want to present the data, and how do we make it, you know, as legible and actionable as possible, right? So we want to make sure that we're very deliberate about, number one, the tickers that we include. I've gone over this many times, but the thing is, right, like if we put on, I don't know, some like offshore oil stock that gets, you know, 1,000 options worth of volume every week or something like that, it's not going to be particularly useful on this platform, right? We want to make sure that we're doing things with really high options volume, things that for which we think this can be useful, and things that people are actually trading, right? And then also the visualization, like we're, you know, I think Jasper's very, very careful about that and making sure that everything stays as clean as possible. Because the idea here is not to provide a platform where, you know, you go there and you do your research on tons of expiries and tons of tickers and all that stuff. Like this is a trading tool, right? You need to be able to look at it, get a quick read of what's going on, and be able to act on that information. Like that's the mission statement, I guess. Okay, Freddie, you trade ES and you use Gamma for your map. Use the options ladder from Thinkorswim. The data we guys get is from... Freddie, can you specify that a little bit more? I'm not really sure what you mean by from the whole market. Where do we get the data from? So our data is not from Thinkorswim. We have a provider. So there's... I don't know if I want to disclose our specific provider, but it's basically an API WebSocket, right? So we're getting all the data like every single millisecond. It's sort of like like a brutal fire hose worth of data. And so there's provider, right? If you think about your broker, right? Your broker is actually getting data from a provider like either Sibo or, I mean, Spider Rock is another relatively famous one. There's DX Feed. There are all these like big data providers, and so and they sort of sell things in bulk, right? So right, we have a contract with that. We get everything sort of raw from them, and then we process it. We actually calculate all of our Greeks in-house, because I don't particularly love the way that they do their that most of these providers do their volatility implied vol calculations. If you really want to get into the weeds, but yeah, it's that part is actually pretty fun. So not super surprising that we've been chopping around here, right? Like if you look at this from sort of that volume profile perspective that I was talking about, we have that synthetic long that's been hanging out here. It's doing literally nothing. We had, I guess more short puts are coming in here. Some of these long puts are bailing. These short calls seem to be bailing as we're selling off here. But in general, right, we're just kind of stuck in the muck here. And more specifically, right, like we have these like really big short puts here that we talked about earlier, really like big strike along, short calls up here, and they're just pinning us. And that's usually the effect that I see when we see, and that's why, I had that tweet the other day where I was like, okay, it seems like we're walled in between these two really big levels off the open. And then of course on that day, right, we break through, the lower wall. But in general, when you see something like this, it's really telling you, okay, here's our range. Like we're in sort of a reversionary environment. If we were to break beyond 42.30, that would be an epic sell-off. Similarly, if miraculously we get above 42.65, we're getting a squeeze for the ages. Okay, data, dark pool data. No, we don't have dark pool data. This is all... Like the entire platform is options analytics, right? So we're not looking at transactions in like stock transactions or dark pools or anything like that. Neither are we planning on doing that. Just to remind everybody, I'm still on the camp of just we're just muddling around here, especially because of this, mess of a strike that's just capping us here. And then most likely, as these puts start to decay, we do end up towards the end of the day, probably after 2:30, making our way up and tapping it at some point. And the basis for that is just the fact that we're not selling off. And if we're not selling off, then there's a lot of like decay in the end towards the end of the day typically takes more juice out of the puts than it does out of the calls. And then on top of that, just this is a really big liquidity level. That being said, unless we get, more calls or more short puts building up underneath us, it's going to get hard. It's going to be hard for us to get up there sort of organically, so to speak. Yeah, you see what I mean? Where it's like, okay, so there's these long calls right here, right? 42.50, and then as we're hovering around that level, they've just been bailing out of them because, they're just they're just not really worth holding on to as we get into the end of the day. And if you did really want to get long, you'd get into these or you'd get into those. But it doesn't seem like there's a lot of participation there. And again, this is a very different dynamic from earlier in the day when we were just selling off and coming into this 4230, and you could see that they were adding short puts. This is, we kind of purposefully did this in the middle of the day because it's hard to do these like more educational live streams when there's a lot of stuff going on. Like I remember the last one we tried to do during an FOMC, and it was just kind of nutty. I'm also probably not experienced enough with the live streaming to do like when I'm really thinking about the markets. It can be a little tricky, obviously, because this is intense stuff. But yeah. Oh, look at that. The gamma on this guy is diminishing as we sell off a little bit. So that would make a lot of sense, for instance, if we're able to actually come back down here, maybe touch 45, maybe touch 40, and then slowly make our way back up towards the end of the day. Again, not necessarily encouraging this type of speculation, just sort of like teaching moment type of thing. In fact, like I wouldn't really put any trades on around here, especially not on an Opex Friday. Not a good idea. Thanks, Mel. I appreciate it. I was kind of nervous that you were in here, to be honest, because you're the much more experienced live streamer. So I very much appreciate that. Okay, awesome. Yeah, and hopefully, so I'm recording all this, so this will turn into a video, and then hopefully we can do, maybe like one a week or something like that. I don't know if that's too ambitious, but then over time, give people a good set of a good set of resources, right, to be able to sift through, because really there is no substitute for screen time. Slot gamma, yeah. So offering the difference between ES and SPX is definitely one of the features that I want to implement. I think that'd be, honestly, that'd be super helpful for me because I mostly trade ES. All right, so they were getting out of these calls. We broke down 43, looking at still kind of mucky, but there's not a ton. There's not a ton to save us from getting to 35 before we do anything. Although we are at VPOC, like monthly VPOC on ES, so that's something, I guess, but I would really wait until, again, none of this is financial advice when I'm talking about, trading or recommendations or whatever. I'm talking about that for the purposes of conveying how I'm perceiving the options profile, mainly for educational purposes. All right, but that being said, what I would contemplate here is if we are able to get, for instance, down to 42.35, something like that, I might think about getting long into end of day there. Also, Freddie, thanks for making all those. I don't know if it's you or your coworker, collaborator, for making all those videos. I also wanted to say, because we haven't really gotten a chance to get to know each other, but en realidad soy argentino, mis papás son argentinos, así que por eso es muy lindo en realidad ver que ustedes están haciendo videos en español sobre lo que estamos haciendo, me parece fenómeno. Y honestamente yo no lo podría hacer porque no tengo el vocabulario digamos, porque no estudié economía ni finanzas en español. Así que, nada, fenómeno. Y gracias por hacer esos videos. Espero que puedan conseguir muchos, no sé, muchos views. Can I explain the order flow for today? Sorry, who is that again? Um, what do you mean by explain the order flow for today? Like, is there a particular aspect, a particular indicator that you're interested in, a particular time period? Okay, looks like we are looking to tap 35 soon. Kind of want to hop back into SPY and see what's going on here. Oh man, this is actually so much clearer than SPX right now. Like, just to see how it's like, okay, we had all these short calls up here. We had a moment where we could have broken above 424 and gotten our squeeze, but then it didn't work. And so now all of a sudden we're in this pocket down here where, there's just nothing. And all these calls above us are decaying, pushing us back down. And so, our next destination looks like lows of the day, 422, something like that. And I actually, to be honest, I had a really hard time believing it. Like, let's go back to order flow because something really cool was happening here. So right, SPY order flow, we were saying, it was getting more bearish to the end of the day. And I was like, well, SPY order flow, really volatile. You can kind of fade it a little bit. Looks like they've been doing okay. But SPX is really what I'm thinking about right now. And look at this. So like we were coming up, right, into the, like over the last while, we're coming up here and SPX order flow, they're just shorting. And now we're finally getting the sell off. And I really, I was kind of biased a little bit where I was thinking, like, yeah, we could break above this level. If we break above this level, we have a lot of upside left in us. And yet aggregate DEX on SPX was just saying, nope, no way. And this guy right here, 1 p.m., like literally on the dot, massive order. Like that's the right here, like, wow. And you can see how they basically just like, we came up and they just said, nope, not anymore. So this is one case in which, aggregate DEX on SPX is just doing such a great job. You're not seeing much long/short vol. Everything falls under the category of long and short vol. 1 p.m. DEX could have been misleading. 1 p.m. DEX on which ticker? SPX. Okay. I mean, yeah, sure, it can be misleading, right? Like that's like if a big order comes in, right? Like you don't know when that person is going to exit that order. Like that's why you have to use levels and risk management and all those types of things if you're trading something like this, right? Just because you see a really big order came through doesn't mean that that's going to determine the trend for the rest of the day, right? It depends. That's why we have the state. That's why we have the ladder. So you can see levels and you can see them growing and diminishing in real time. So if you have access, I mean, I'd encourage you to, load history and go back and look at what positioning looked like around 1 p.m. And then you can see how SPX responded to that. But incidentally, right, my claim, I suppose, was that I wanted to see us get around to, I think I said 35 actually. And then around 2:30 p.m., then I had sort of more of a bullish outlook for the rest of the day. And I think that's still holding steady. Like this was a nice little sell. A nice little sell here. No, aggregate DEX is just 0 DTE right now. Eventually, we're looking to implement more DTEs. But yeah, so in terms of like how I would view positioning right now to answer, sorry, I don't know why it's like blocking out your name. I think you're SPX something, the guy with the gray the gray hair. Um, looks like I don't know what is that? Um, one of those Marvel characters or something. One of the Avengers. I don't know. Anyway, um, JPow. There we go, JPow. That's who you are. I feel like I see you around, but we've never like interacted before too much. So yeah, my take, right, is pretty simple based on like what we have right here, which is we have these boundary conditions, right? 42.65 and then these 42.30s. And so we're trading inside this range, right? Within this range, it's likely to be pretty mucky. But I do have a little bit of a bearish bias until we hit around 230 and some of the decay starts to hit these puts more strongly. If we do fall under these 42.40s, I'm expecting 42.35. At that point, I would look to see if the 42.30s down here start to add these short puts. If they do, then it's a pretty decent long entry. If they don't, then we're probably going there. And yeah, let me think if I have any other takes. No, that's mostly it for right now. I mean, if you were to look at full here, right? And this is something that I could have, I was talking about a little bit earlier, which is look at how this call gamma up here is decaying, right? Part of that's that price is coming down, but part of that's that people are also bailing out and taking profit on those short calls. And so if we come right into negative GEX, all of a sudden we have a different picture where we're looking at, okay, let's see if we can hit one of these really major levels, whether it's 35 or 30, and what sort of a reversion we get off of there, because that could actually be quite powerful. But it's going to require us to get further into the end of the day. So essentially, what we want to do is we want price to kind of come down, see if people get suckered into buying a lot of puts, and then if we get a bounce off one of these levels, that can lead to one of those feedback loops that could take us a lot higher, especially if there isn't as much juice in these 42.65s anymore that are kind of putting a cap on us. Again, we want to see in terms of GEX, we want to see kind of a clean laddering where, because these can act as accelerants, right? If we get above the 42.45, right? It's like, boom, we're above there. It can push us up to the next one. That can push us up to the next one and so forth. But in order for that to happen, the acceleration that each of them provide have to be more or less equivalent because when we're over here, these guys are actually pushing down on us. The 42.55s are actually pushing down. Like let's say we're between these two strikes, then the 45s are going to push us up and the 55s are going to be pushing us down. So if we can get a clean laddering effect, it means that each time we get past go, so to speak, right? We get past each little patch. I actually kind of think about them like those like little accelerators in Mario Kart. Like if you guys have ever played that, where it's like if you go over that little patch of terrain or whatever, it like shoots you forward faster. But the problem is this guy being too big puts downward pressure on us, so it becomes a lot harder to accelerate up. All right, I'm gonna take a bathroom break. I'll be back in a little bit. Yeah, and we'll see if we can get that squeeze into close. All right, can you guys hear me? Okay, great. So it looks like we are coming down into that 35 level that I was looking for a little while back. Let's see how the profile has changed. Okay. Looks like short puts at that 30 are growing. They think that that's safe. And then looks like basically long puts have grown as well. And short calls have too. What's interesting though, I mean, these puts over here, the 4250s, have been, those short puts have been coming out. Okay, I guess that's all pretty consistent. This is interesting though. These guys are bailing. Some of these guys are scared too. Yeah, nothing particularly bullish right now, unfortunately. I mean, I say unfortunately, the reason I say that is because I only really like to trade from the long side. So I won't short the market. But that's just a psychological, personal thing, right? It's not a recommendation for anybody. I'm curious, have you guys been able to get onto the free trial so that you can have this on your own computer? Okay, great, Peter. I'm glad to hear that. Awesome. Also, right, like we recognize that order flow is quite pricey. That is really for very right, like it's for a specialized crowd to some extent. Um, yeah, there are plans to add Vanna and Charm actually. Oh, look, are we bouncing off 45? Or oh no, 40. We got all the way down to 40. Okay, cool. So PGO, are you already subscribed? Because if you're already, oh, okay, well then just go on the website. Go on the pricing page on the website. JPAL, we haven't even started building it, so I mean, it's all built on the back end. We haven't started building it on the front end yet, so we don't know where it's going to go in terms of pricing yet. Combo position at 42.15. Both calls inputs. Okay, let's see, Mel. 42.15. Oh, sure, yeah. So it looks like, right, like, oh, wow, we really are selling off a bit here. So if they're, I mean, to be honest, like these calls are not super relevant to me because they're so small. But when you do see a strike like this, which is long calls and long puts, that's actually a really good point, Mel. So it means that generally we're expecting volatility expansion into this node. Similarly, right? Like imagine this were reversed. Let me see if I can find a strike like that. Actually, not so much today. But imagine it were flipped, right? And we have a short call and a big short put at the same strike. What that means effectively is that like the participants are expecting price to go there, right? If you have a long put and a long call at the same strike, what that means is anywhere but here. It means they're expecting an expansion of volatility away from that zone. So basically, the idea would be with this position, like imagine that the put and the call were the same magnitude, let's say. Then if price stays above, then it's going to shoot up like crazy. And if price breaks below, then it's going to sell off like crazy. So it's basically a long straddle, right? Whereas if you have both short in one direction, then it's going to be a short straddle. And so they're expecting price to go there and volatility to compress. And effectively, what we do see a lot of the time is if we get big positions like that, price does tend to just hover around there and just, chop around, which is kind of cool. But yeah, in this particular case, yeah, exactly. Totally. Yeah, if you have short call, short put, you should expect pinning around there. Um, yeah, so if Sachin, that's a really good question, and we are going to incorporate more volatility stuff into here. But yeah, if volatility comes down, which I am expecting into the end of the day, I would expect us to price to go up. Absolutely. It just hasn't been coming down very much yet. Because, I mean, look at all these puts that are underneath us. And this 42.65 is not as relevant as it used to be since we're so far away from it. So I wouldn't be surprised if we can get, 10 points to the upside, 15 maybe. Yeah, so that's one of my main projects once this is over is actually incorporating live versions of skew charts into here. So you'll be able to see it at the same time. So there's currently no way of seeing the status of implied volatility on the platform itself. You can look at your options chain for that, or you can look at something like 0DTSPX.com. They do a pretty decent job, although there's around a 60-second delay on that site last time I checked. So yeah, this is looking pretty positive actually now, to be honest. Yeah, Barry, that's a really good question. A lot, right? So that's something I mentioned earlier in the stream, which is that, okay, here sorry, just to interrupt myself, we're taking off from 40 from 35. If we can get above these two put strikes here, we're looking at some upside here, like actually, which would be really nice, Yeah, so put selling right here. But the thing is, if we're above all these puts, it doesn't really matter whether they're sold or bought. Just the point is that we're above them, they're decaying, and we're very likely to be able to move upwards a little bit, which is why if you look at, full and next, we actually take all the puts and we group them all together, irrespective of whether they're bought or sold. Because the only thing we care about is that those positions exist, right? In terms of the influence they're going to have on the market. Barry, back to the Opex thing. Okay, so I was a little bit off. I said, what did I say? I think I said 45 for my... No, did I say 45? I don't remember. It was a while back. But anyway, we are seeing that upside. I did say 230, so that was pretty close. Not that, again, making projections and trading are not the same thing. And just because you can make good projections doesn't mean that you can trade well. And you can trade well without making any good projections. Just FYI. So this is, just a, how would I put it? A little sport here, what I'm playing. Yeah, Session, the whole point of this is that bars to the left are sold and bars to the right are bought. So these puts are sold, these puts are sold, these puts are sold, these puts are bought. That's like the whole point of the options profile. Yeah. And I mean, I assume probably from spending enough time in Bear Trap, you probably have a pretty good idea of all the cool stuff that you can do with that information. And if you want to really get confused about it, ask Ock, and he'll give you a wonderful explanation, which is extremely actionable, but also terribly confusing. That's what you get when you talk to the Vol guys, Like they just which I'm one of, by the way. I had to sort of censor myself to try to explain this in the most intuitive manner possible today, because all right, so let's look at this. It's very interesting they're getting out of the 42.55s. That's like a big reduction in exposure right there. And then it looks like these long puts are also bailing. So I wouldn't be surprised if we actually, this is like a pretty decent development here. Although these long puts are adding here. So it's still a little mixed. It's still a little mixed. Allison, yeah, that's right. Bars to the left are sold and bars to the right are bought. and this is from the customer's perspective, right? Not the dealer perspective. This is what other, like, let's say that you're trading options, you want to see where everybody else is. This is what you look at. Also, just looking at ES right now, footprint, it looks like there's not a ton of liquidity right now. I don't really know what's going on, but it's kind of no man's land out there. Yeah, Classic X is still naive. Yeah, that's the point of the sort of the upgraded platform, I guess. Oh, I haven't been paying attention to the news, Peter. Also, kind of try to stay. I mean, for the purposes of um, just kind of going to keep to looking at the price action, looking at the positioning, and working off that, especially for the purposes of any sort of company stuff, I guess. My podcast, on the other hand, there I can talk about whatever I want. I'm glad, Peter. Yeah, and like, please feel free to ask more questions. I need more, uh, so that not to generate content sui generis, right? Just need a little more. Yeah, I'll probably stick around till close. I do the Bear Trap podcast on YouTube with a buddy of mine from the Bear Trap Discord. Um, I mean, lately he's been kind of busy. He's got kids and a job and a lot of stuff to deal with, so I've been doing a little more of my own things. I haven't posted in a little while though, but I'll probably be doing more stuff soon since we've launched already. Um, Let me check the Gex index order flow 1 second. So this is a pretty decent inflection point. Looking at like 35 there. So we there is a bug right now where if you load up, like when you first load the order flow pages, there's like a big bar that pops up, which is just like a JavaScript issue that we're gonna get rid of. Um, but once you've loaded the page, whatever you see there is what's in our database, so that's accurate. Okay. No, that's fine. That's possible. Thanks for letting me know. Yeah, I'll look into it. There's always like there are always little things like that that crop up, you know, anything like this. All right, looks like we actually tapped 35, which is great, you know. That's a big one. Let me see what I'm looking at here. Okay, so these guys, shorts are holding strong. These guys also kind of expanded. And then these guys are bailing. So I'm, you know, tentatively a little constructive here on price, actually. And we have, okay, so yeah, if we can just get up to 40 again, then we should be good to go for a bit. But this is again the fight, right? Between those two long strikes, they make stuff pretty mucky. It's kind of annoying. Okay, here we go. Starting to move a little bit. Just getting, oh wow, look at that. Some long puts came in down there. These guys are bailing. Okay, beautiful. Is it 244? All right. And we're kind of clear here, actually. Hard to not be constructive. Probably looking at, if we pop that guy, that's going to muddle us, but then wouldn't be surprised to see 55. All right, we're on the way. Ah, 40, stalling us. Okay. This is actually kind of fun. Okay. These guys are getting out of the way, which is great. And then nothing, 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 nothing up to the synthetic at 50. So I feel like that would be a pretty decent target if you were here, which translated for ES premium. 50 is going to be, oh wow, really? That can't be right. Sorry, I have a hard time sometimes doing math in my head when I'm like 50. Yeah, that's pretty far actually. It's like another 10 points up from where we are right now. So it's like 75-ish. Yeah, thanks, Peter. You're right. There we go. I should do these more often so people can do math for me. Good question, Allison. The DTE on options profile is always 0. Like these are primarily intraday tools. We'll branch out down the line, but for now, that's what they are. All right, still working with 40 over here. But look at them bailing, right? Like they're getting the hell out of there. Although I don't like how these guys underneath are growing. So it's not the, it's not the fuzziest feeling here. Yeah, no worries, Allison. Okay, looks like they lost 40. Just consolidating here. That was so interesting, right? So like we got a really big response off of 35. Brought us up to the next long strike. They're getting the hell out, but we obviously stalled out a little bit there. So you can see that a lot of times our consolidations on ES or whatever, they happen in these like 5-point ranges between like big strikes, oftentimes big long strikes on SPX. Hmm. May have taken a slight little scalp over there off of what was that? Off 35. It's kind of nice. I'm still constructed, by the way, on price. It's just like, do I really want to have to deal with the emotional mess of just waiting through this range? It's just annoying. It's not worth the emotional expenditure. I feel like that's something that isn't talked about enough. I mean, obviously, there's a lot of trading literature about, sort of the emotional side of trading, like the mental game, all that stuff. But something that, like a concept that I found really useful is just mental capital or even emotional capital, which is whenever you're in a trade, whether you realize it or not, you are sacrificing, you're raising your overall anxiety. And so you're worsening your capacity to make decisions. And so time in trade um, is dangerous in a way, right? The more time you spend in trades, the more difficult it is for your system, unless you're some type of, super demon, like shout out to Clark. I don't know if he's in here, but yeah, that can make it, that's a really relevant metric. All right, so now we break 40. I'm looking for 50 if we break 40. Yes, I mean slot gamma. So both, right, like convexity, aggregated deltas, all that stuff. Those tilt indicators are largely they're in the order flow tab, which I'm not going over too much in detail today. But yeah, that's the idea with all of those. It does. So trading does involve an adrenaline kick, and adrenaline kicks are really useful, sorry, for fight or flight situations, and really, really awful for situations that are not like that, which trading is not. So it's this sort of very annoying thing where just engaging in this activity is going to kick off all sorts of mental processes that are going to make you worse at it. So, I'm sure everybody in here already knows that, but it's just worth thinking about every once in a while. I do want to hop into order flow and take a look at some stuff here. Okay, yeah, it looks like SPX traders are still mostly bearish. Some bullish order flow came in there. Let's take a look at, oh boy, that makes sense. So that's all juice that we can squeeze into EOD actually, technically. And convexity is rising, which is not great. See if we got any big orders here. Okay, so some bullish order flow, bearish order flow, nothing big. Let's hop into SPY. Okay, so SPY is a little more constructive in DEX terms, which I don't think means very much. How do you tell order flow bullish or bearish? Okay, so if somebody buys a call, that's bullish order flow. If somebody sells a call, that's bearish order flow. If somebody buys a put, that's bearish order flow. And if somebody buys, what did I say, sell a put? Sell a put is bullish, buy a put is bearish. So it's basically the directional bias in delta terms behind each trade that we are classifying. That is how it is defined in this screen. So bullish flow are those categories that I just mentioned, and bearish flow are the other categories I just mentioned. No, oh, I understand your question now. Okay, yeah, so bullish flow means it's positive here. Like, look at this axis. Bearish flow means it's negative. Apple and state tab. Yeah, I can hop over there. One second. I just wanna, refresh myself a little bit on, I wanna get updated on what's been changing over here. Okay, so they're getting out of these. That's good. They've been getting out of those. More short puts holding strong, increased short puts at 42.25. Okay. The read is still kind of intact unless something big changes. We could get some crazy orders at 3 p.m., right? Remember, everybody, like, this is Opex day, so, who knows? Okay, Apple and state tab selling 175. Apple, state. Yeah, I mean, that's the right way to read it, Sachin. They are selling the hell out of that 175. Good call. Yeah. Something I've been looking at a lot lately, actually, is comparing, you know, long options versus short options in all the different tickers, like these big tickers, Tesla, Microsoft, Amazon, Nvidia, versus SPY or SPX. They're selling puts in Apple, selling 180s and selling 175s, which is kind of odd. I mean, I guess, there's bullish expectations for Apple. I mean, that's a good call, Sachin. Like, I don't know. That's kind of insane, to be honest. Like, I don't know what they're expecting here. Unless they're actually just trying to buy Apple stock by the end of the day. Like, that would make sense, right? If they're actually trying to get exercise here. Or they think we're going to squeeze. I mean, if we squeeze above 175, like, that'll work out. It's totally possible. All right, power hour. And I do expect that we're going to get some, we've put in a higher low, more or less, and we are above most of the relevant put strikes. So it's pretty hard to be bearish here. Again, barring, Opex messes. Okay, here we go. We got that pump. Beautiful. All right, we should make our way back up to VWAP at around 50, I think. Or VPOC, actually. What's 50? It's like, what did we say, Peter? We said like 75 or something? Oh, that would be quite a journey, actually. It's possible, though. No, so everything is classified. Everything. Oh, awesome, Mike. I'm glad that helped. Again, not financial advice, but, we can help people make money. That's what we want to do. So yeah, every single trade is classified. The how would I explain this? My confidence is very, very high. So we're not necessarily trying to be precise, right? Or sorry, we're not necessarily trying to be accurate in the sense that, like, if a particular strike contains, and this just has to do with how the algorithm works. We're not necessarily trying to be accurate, meaning that, if I say that this specific strike, right, like, has 1,300 or whatever, it might not be exactly 1,300, right? But what is super, super accurate is the relationship of all these strikes to each other. And that's what's important for reading this, right? So, I'm not going to promise you that this is exactly the number of, 4250s calls that have been bought today. But I can say with very high degree of confidence that the relationship between the magnitude of this strike and this strike is accurate. Similarly for all of them. And so in that sense, everything gets classified, everything gets put through the system. Yeah, no worries. It turns out that when you make sacrifices, it's like everybody ends up being really, really focused on, how would I put it? Like those sorts of individual factoids. Um, and so I feel like there's a lack of understanding that, and here I'm talking about, other order flow classification systems out there. There's a lack of understanding that what really matters is the big picture. What really matters is the relationship between, the different tickers, the relationships between the different strikes, the relationships between the Greeks, all of that stuff. The number on the first grid line. Do you mean the white one here, Allison? Like this white 4238 thing? Oh, that's spot price. So that's the current price of SPX. The vertical. You mean this one, minus 4,000? Oh, okay. The vertical outside the spot price. Well, yeah, these are just, it's classified volume, right? So like I can, eyeball it and be like, okay, these 4265s are around, there's about 4,000 of those that are short. I actually have a poll question. Um, so one of the things that bugs me is that you guys see, I'm playing around with this cursor. It's like pretty responsive. It's nice, but the corners on this guy are rounded, right? But the corners on the cursor, like on 4277 right now, there, that little block, they're not rounded. It's 90-degree angles. Uh, does that drive other people crazy, or is that just me? Because if people are fine with that, then I won't bug Jasper about it. But like, it's me. Okay, all right. I mean, that's good. Less work for Jasper. Yeah, exactly, Mel. I want support. I want to be able to support for fixing this bug. Like if everybody gets behind me, it's like those 90-degree corners are so bad, it needs to get fixed. All right. Little what's it called? Public announcement here. Above 40. Things are looking good. State SPX chart be applied to SC? No, not right now, Simon. That is definitely on the agenda as well. Because that's the thing, right? Like right now, you sign up for GexBot any tier, and you can have the classic levels on Sierra chart, which is great. And those levels are still, the big levels are still pretty similar. Oh, here we go. Squeeze time. Hopefully. Options on futures in the pipeline. Yeah. Well, yes and no, right? I would say yes, contingent upon options on futures volumes, right? Because what we're trying to do here is display levels that are relevant for intraday price action. And last time I checked, volume and options on futures was relatively low, meaning that the effect that those are going to have in terms of hedging dynamics and all that is not going to be really high. So it's like doesn't really make a ton of sense to do. Um, but um, but I'm gonna look into that, and if it hits a particular threshold, right, where we're looking at like pretty high volumes, then yeah, 100%. Slot gamma, can you specify what you mean? The deltas of the individual strikes? Oh, you mean DEX, don't you? Kind of like the DEX charts in Bear Trap. Oh, here we go. Yeah, slot gamma, but like, what do you mean in terms of it being displayed? Do you also mean like basically a price ladder like we have right now, except that instead of having classified volume, it's delta weighted classified volume, something like that? Like, what type of UI are you envisioning here? Allison, so yeah, I talked about that a little bit more earlier in the stream, I think before you showed up. Also, this whole stream is going to be put on YouTube, so I'm recording it. But TLDR right now, we are above all of the major put strikes for the day. And those are going to be decaying as time on the day runs out, right? So we have 60 minutes left. These are all 0DTE options. Those are all people who are short, more or less, right? There's somebody who's short on either end of those, and those options are decaying, which is meaning that basically the reality here is either customers or dealers are able to buy back deltas into EOD, and so that makes it very likely that we're going to get pushed up. Again, I wouldn't really trade this price action, guys, like unless you're a futures scalper, like I tend to do sometimes, because this is a mess. It's a complete mess, as Opex usually is. Slot gamma, so I mean, options trade in general, right? Like when you're trading an option, you're never trading the underlying price, right? Like there's a price for that option, and like if you're a very advanced option trader, then you're actually trading the volatility, right? You're looking at options in terms of vols. And if you're very advanced, then you're actually just trading straddles, right? You're like long one straddle, short another straddle, all the way along the chain. So a key reference to have it look at it separately or otherwise. Um, hmm, I feel like I need a little more information to understand what you're talking about. Good question, Barry. Let's see. All right, so we're at, oh wow. Yeah, this is a very supportive structure. You guys see what I was talking about earlier? I was like, well, these guys up here, if they fade away and we get a ton of juice in the puts down here, all of a sudden that opens up the field to the upside. The 4250s are completely gone, meaning that if we're able to get up above 45, like we are all of a sudden off to the races. This still isn't my favorite structure, right? Like I don't like that these 65s are bigger than everything else. That's kind of annoying. But if they were to shrink just a little bit more, and these guys were to grow just a little bit more, we'd be in business. And it is really nice how, like, look at how big all of these guys underneath us are. So that's how much it's, you can think about it as this is how much juice there is to decay underneath us. The downside is if we break underneath 40, the whole narrative shifts, right? Then all of a sudden we're looking at a 30 close, which would, it's not my favorite. Let's check out full to see if we have a, okay, full looks even better actually, I would say. This looks even more constructive. So that may be the case, right? It may be the case that everybody got out of their long 4250 zero DTE calls. In fact, I think that that is true. They are getting out, yeah. Um, but that's not necessarily a bad thing, right? Like I actually want more of these call strikes to shrink a little bit, so that we can kind of clear the way to the upside. So I just want puts underneath us decaying, and then call strikes not really there to stop us, and then we can just rock it. Again, not super likely today because it's Opex and all that stuff, but I'm just talking about the theory of all this. Although I am still constructive on price. Yeah, this is a pretty decent picture. Not ideal, but pretty decent. All right, I need to go grab a snack. Just to go back to it, the issue, Barry, is like if they're holding on to those 4250s right now and price doesn't go there, all of a sudden we have a ton of people that are going to be selling calls, which is not super constructive. So it's kind of like, you know, yeah, if all of a sudden you see them sell those calls, right? It's bearish on price right now. And we're probably going to get a bit of a move down. But I'm trying to think a little bit about, what the next play is. But yeah, I mean, we've been walled in here and here. Nothing has happened basically since we started. What did we start at 1 p.m.? It's been 2 hours. This is like nothing. It looks like they want to tap 35 again. Oh, I didn't see your message, Jay Suave. I didn't realize you were in here. How often do I do it? I just been kind of playing it by ear lately. I think I'm gonna try and do it like once a week, maybe. But yeah, it's pretty fun. I should also check. I think sometimes people write in general. Okay, so we touched 40 again. Got a little bit of a reversion off there. But again, not much going on here. Let's check here. If people are figuring anything out in general. Thallium's funny because he has like 4 windows open with order flow so like 3 order flow charts on each window and then just everything. It's kind of insane. I don't think I could trade like that, but okay, cool. I think we're good. Uh-oh. Losing 35 is not ideal. Let's go back over here. Oh yeah, no, we're okay. We are okay. We're just setting up pretty nicely still. Just sometimes it takes a really long time, like, yeah. I feel like I want to see it through 35. It's no coincidence, right? Like this is exactly where we're just hovering. It does look like they're getting out though of these 35s, but they're also getting out of the 30s, right? The short 30s. All right, looks like we're going to retest low of day. Which, again, looks like it's 30. Seems like they're exiting here, though. Exiting there. I wonder. Still doesn't look like we're going to just cascade to me. Okay. I guess aggregate dex on SPX kind of does think so. Oof. Okay. Yeah. Pretty decent time to try along, actually. There we go. Right above 35. Perfect. Pretty big note at 60.50 on ES. So if we can get that, out of the way, we can get back to the new range. Okay. Yeah, probably. Like they did last week, right? Where Friday, like VIX went up. There were so many posts about that, about how spot vol beta was crazy. Um, and it was blamed on the war stuff. Like they were saying that, people were hedging for the war risk. All I knew was, well, if that's happening, there's kind of a lot of juice out there to be squeezed soon. Got into the next week, beginning of the next week, all of a sudden, markets move up like crazy. All right, here we go. 35 shrinking, getting out of here. Nice, good start. It's been like a waiting game, like a billion years waiting game on this guy. All right. Man, I've just been, just took a second little scalp there off 35. It's just like beautiful little trades that can set up here, like even in these terrible ranges where, if you just know where that level is and you have confidence, you can do a little bit of that SPX ES conversion in your head. Can do a pretty decent job. Yeah, exactly. Monday the market shot up. Well, I mean that's because everyone gets into, right, like vol gets bid way too much. Everyone gets into puts. And then if we don't have a massive sell-off over the weekend, then they all get squeezed like crazy and so we shoot up. Yeah, we can do more series on that type of stuff. That's more like, how would I call it? I like to think about it like the seasonality of vol in a way, right? There is a seasonality of vol independent of that, which has to do with like VIX-X expiration cycles. Put mana rally. That's a good way to put it, Slot Gamma. Put mana rally. There we go. Another reason that having mana is actually kind of useful. The thing is, for 0DTE, after a while, right, like what I've been talking about, like the reason that I'm still like bullish, despite the fact that it's like, okay, we're pretty close to the low of the day, it's the last hour, all that stuff. It is Vanna related, right? And it's, hey, we have all these puts underneath us. What's going to happen with all these guys? They have to go to zero. And then we have a really nice little hollow here to go up. Just been waiting for it forever because So long as people continue to be confused, it's going to take a while. And a lot of times it does. Yeah, I mean, it's those two things combined, right? Van and charm. It looks like we are getting a bit of a bit of a move here. It was kind of cool. They came down to 35 and then just massive wick there, right? It's like I got another message here. And I can't even tell where my... Oh, here we go. Oh, John. Okay. John M. All right. Still waiting. See if they can pop 40. Maybe we'll finally have a trade to make. You know, like a trade that isn't like 1 or 2 points. Jas is trading today too. Yeah, he is. Oh, what a surprise. Breaking above VPOC. Also, 75 that we were talking about, Peter. That's VWAP on ES, and it's 42.50 right here. This synthetic long. It's a very nice little stopping place for us for the end of the day, I would think. Look at all these long calls I got added here at 50, right? Over the last, what is that, 30 minutes actually? It's like they're preparing. In 10 minutes, it'll be 3:30, have the last half hour. We need to get unpinned above this 40. It's being a mess. Nope, just that one didn't work. And oil's finally having a down day again. All right, guys, I don't anticipate anything particularly exciting happening anymore. I mean, like, not that, obviously nothing's happened since we started, but additionally, like, even if we do pop up, what are we talking, 15 points tops? Like, this is not particularly fun anymore. And we're hitting about 2 hours and 20 minutes. I feel like, yeah, unless anybody has any more questions, I think I'm probably done for the day. I mean, I'll leave this up. Or actually, no, because you guys can all get the free trial anyway, so you can watch it yourselves if you want to see what happens at the end of the day. But yeah, I think I'm going to wrap up. Yeah, of course, Mike. I'm happy you guys were able to hop on, and you know, I hope to improve in terms of how I explain this stuff. And as more people, you know, as more people start to give us feedback, explain what they see, all that stuff, I'll find out what it is that people understand, what they don't understand, and find even better ways of explaining this. Allison, the free trial link, if you're not already a member, if you go to gexbot.com and you go to the pricing page, it's on there. Yeah, thank you, VG. Absolutely. Yeah, thank you everybody for showing up. I appreciate it. I think we got some good content here. And wait, so Ben, you want it to keep recording until EOD? Um, I mean, I can. I guess I can end the stream, but keep the recording and then split them up like that. I just don't want to keep streaming because I want to do some other stuff with my computer. All right, cool. That sounds good. All right, thanks everybody. I'll see you in the next one. Hopefully, I'll announce that one too.